Bismillahirrahmanirrahim. This is the third video on accrual accounting. We will solve exercises on adjusting entries for accruals and deferrals, and we will also prepare financial statements from an adjusted trial balance. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So let us start with the first exercise. The ledger of Hubbard Company includes the following accounts. Explain why each account may require adjustment. So prepaid insurance may require adjustment to recognize the expiration of insurance during the period. Depreciation expense may require adjustment to allocate the cost of an asset as an expense for the current period. Unearned service revenue may require adjustment to record revenue that was earned but not yet recognized for services provided during the period. And interest payable may require adjustment to recognize accrued but unpaid interest on notes payable during the current period. Let us move on to the next exercise. So we have the following information and we have to indicate the type of adjustment and the status of the account before adjustment. In the following cases, first of all, supplies of 400 are on hand. Supplies account shows 1600 as balance. So this is a adjustment of prepaid expense, and before adjustment assets are overstated while expenses are understated. Then service revenue earned but unbilled total 700. This is the accrued revenue adjustment. And before the adjustment, assets are understated and revenue is also understated. Then interest of 300 has accumulated on a notes payable. This is a adjustment for accrued expenses. Expenses are understated while liabilities are also understated. Then rent collected in advance totaling 1100 has been earned. So this is a adjustment for unearned revenue. And in this case, before adjustments, liabilities are overstated and revenue is understated. Let us move on to the next exercise. Stack Advertising Company's trial balance at December 31st shows supplies for 8,800. Supplies expense are 0. On December 31st, there are 1100 of supplies on hand. We have to prepare the adjusting entry at December 31st, and using T account, we have to enter the balances in the accounts, post the adjusting entry and indicate the adjustment balance. Okay. So on 31st December, the supplies are for 8,800 and a physical count shows supplies on hand for 1,100. That means 7,700 of supplies has been consumed. and this becomes an expense. So supplies expense will be debit by 7,700 and supplies will be credited by 7,700 as well. Then we will make the T account for supplies. We have supplies on 31st December for 8,800 and the supplies was 0 on this date, supplies expense, and then the supplies on hand is 1,100. Supplies is credit by 7,700 and supplies expense is debit by 7,700. So after the adjustment, supplies expense is for 7,700 and supplies after adjustments are for 1100. Let us move on to the next exercise. At the end of its first year, the trial balance of Jules company shows equipment for 22,000 and zero balance in accumulated depreciation, equipment and depreciation expense. Depreciation for the year is estimated to be 2,750. The adjustment entry for depreciation on 31st of December. So obviously depreciation expense will be debit and accumulated depreciation equipment will be credit by 2,750. Now we are going to record this in the T account. So depreciation expense is debit by 2,750 and accumulated depreciation is credit by 2,750. So we have posted them in the T account and we have to show in the balance sheet the presentation of equipment. So equipment is for 22,000 and accumulated depreciation is 2,750. So that means that the book value of equipment is 19,250. Okay. Let us move on to the next exercise. Interesting one. On July 1, 2012, Ryan Company paid 12,400 to Craig Insurance Company for a 2-year insurance contract. So this is prepaid expense. Both companies have fiscal year ending 31st December. Now these are the instructions. For Ryan Company, journalize and post the entry on July 1 and the adjusting entry on December 31st. So first of all, let us make the journal entry for Ryan Company. And for Ryan Company, we have prepaid insurance. Prepaid insurance is debit and this is debit by 12,400 and cash is credit by 12,400. Okay. Then we have to record the insurance expense. So insurance expense is debit and prepaid insurance will be credit. Now you can see that we have to charge depreciation for 6 months. The value we have to charge the insurance expense for 6 months. So we have 12,400 times 6 and this is for 2 years, that means 24. 6 4 is 24, that makes 3,100. We will place this information in the T account. So prepaid insurance was debit for 12,400 and then we have prepaid insurance expense credit by 3,100. And then for the insurance expense, it is 3,100. So the balance will be 12,400 12,400 minus 3,100, that is 9,300. Next, we go for the journal part B, and journalize and post the entry on July 1 and the adjusting entry on December 31st for Craig Insurance Company. Craig uses unearned service revenue and service revenue. These are the two accounts that they are using. So they have received cash. So cash will be debit by 12,400, and this is a liability, unearned service revenue of 12,400. Then on December 31st, they are going to earn the revenue for 3 months, sorry, for 6 months. So unearned service revenue will be now debit by 3,100, and service revenue will be credit by 3,100. So unearned service revenue, we will put in the T account. We have unearned service revenue is credit by 12,400, and now it is debit by 3,100. Service revenue is credit by 3,100. So now we have a balance of 9,300 for Craig Company. Okay, let us move on to the next exercise. The bookkeeper of Forsyth Company asks you to prepare the following accrual adjusting entries. At December 31st, interest on notes payable of 300 is accrued. If it is accrued, that means interest expense is debit, and interest expense is debit by 300, and interest payable is credit by 300. We move on to number B, service revenue earned but unbilled. If it is unbilled, that means account receivable is debit by 1,700, and service revenue is credit by 1,700. We move on to number C, salaries of 780 earned by employees. So salaries and wages expense is debit by 780, and salaries and wages payable is credit by 780. So this completes this exercise, and now we move on to the next exercise. The trial balance of Lagras company includes the following balance sheet accounts. So, and we have to identify the account that might require adjustment. For each account that requires adjustment, we have to do two things. We have to indicate the type of adjusting entry required and the related account in the adjusting entry. So first one is accounts receivable, and for accounts receivable, the type of adjustment will be about accrued revenues, and the related account will be service revenue. For number B, prepaid insurance. Obviously the type of adjustment is about the prepaid expenses, and the related account is insurance expense. Number C is equipment, and there will be no adjustment for or any related account for equipment. Then for accumulated depreciation, yes, this is an example of prepaid expense, and sorry, let me put it down. We have accumulated depreciation equipment, and this is the adjustment is about the prepaid expense, and the related account is the depreciation expense. We move on to number E, notes payable. And notes payable, there will be no adjustments are going to be required, and there will be definitely no related account. Number F, interest payable, and for the adjustment this will be the adjustment of accrued expenses, and the related account will be the interest expense account. We move on to the next one, that is unearned service revenue. And unearned service revenue, this is obviously adjustment is about the unearned revenues, and the other related account will be the service revenue. Okay, next let us move on to the next exercise. The adjusted trial balance of Henlon Corporation at December 31st includes the following information. We have to prepare an income statement. The balance in retained earnings, we will go for part B in a minute. So let us first of all go with part A. So we have to prepare the income statement, and income statement is revenue minus expense, and in this case we start with the service revenue, and service revenue is 32,000. Then we have expenses. We have salaries and wages expense. Then we have rent expense. Then we have insurance expense. Then we have supplies expense. We have depreciation expense, and there are no other expenses. So we are going to make the total. The total is 22,200, and the net income will be the revenue, total revenue minus total expenses. That will be 9,800. Now, in this exercise, the beginning retained earning is 17,200. To this we will add the net income 9,800. So sorry, it will not be 9,800, but rather what they say in the question. Prepare a retained earnings statement for the year assuming net income of 10,400. So we have the retained earning of 17,200, and net income will be 10,400. So the total is 27,600, and from this we will subtract the dividend of 6,000. So that makes 21,600. Okay. Let us move on to the next exercise. The following selected account appear in the adjusted trial balance. Indicate the financial statement on which each account would be reported. Now, accumulated depreciation is going to be reported in the balance sheet. Depreciation income is expense in the income statement. Retained earning beginning, it will be in the retained earning statement. Dividends will be in the retained earning statements. Service revenue will be in the income statement. Supplies in the balance sheet, and accounts payable also in the balance sheet. Let us move on to the next exercise. The ledger of Witzling on March include the following data. The analysis of the account shows the following. Insurance expire at the rate of 300 per month. So we have to prepare these adjusting entries. So insurance expense is debit for number 1, and prepaid insurance is credit by 300. Supplies on hand are 900. Now supplies you can see is 2,500. So 2,500 minus 900 will give us 1,600. This is what we have used for the supplies. Then number 3, the office equipment depreciate at the rate of 200. So depreciation expense is debit, and accumulated depreciation is credit by 200. And finally, 2/5 of the unearned service revenue was earned, and when it is earned, it is service revenue. 2/5, that means 2/5 of unearned service revenue, that is 10,000, and this will be equal to 4,000. Let us move on to the next exercise. Tammy Cross is the new owner of Tammy's Computer Service. At the end of July, her first month of ownership, Tammy is trying to prepare monthly financial statements. She has the following information for the month. At July 31st, Cross owed employees 1100 in salaries that the company will pay in August. So they have not paid. So salaries and wages expense is debit by 1100, and salaries and wages payable is credit by 1100. On July 1, Cross borrowed 20,000 from a local bank. The annual interest rate is 9%. So 9% of 20,000, 9% of 20,000 will be how much? Will be 1,800, and then this is for 1 month, so we have to divide by 12. So 9% of 20,000 is 1,800, that is 0.09 times 20,000, that gives us 1,800, and then 12 divided 12, that will be 150. So interest expense is debit and interest payable is credit by 50. Then service revenue unrecorded in July totaled 1,600. That means this is accounts receivable, and that is debit by 1,600, and service revenue is credit by 1,600. Okay. Now, indicate in which financial statement each of the following adjustment trial balance account would be presented. Now, service revenue will be in the income statement, account receivable is in the balance sheet, notes payable in the balance sheet, accumulated depreciation in the balance sheet, common stock in the balance sheet, and utilities expense will be in the income statement. Okay. Now, Peng Company accumulates the following adjustment data, and these are the instructions. For each, indicate the type of adjustment and the status of the account before adjustment. We have done similar exercise sometime before, and look at the first one. A service revenue earned but unbilled total 600. So that means this is accrued revenue, and before adjustment assets are understated and revenue is also understated. Number B, store supplies of 160 are on hand. Supplies account shows 1900 as balance, and this is a prepaid expense adjustment. Assets are overstated and expenses are understated before the adjustment. Utility expense of 275 are unpaid. So this is a adjustment for accrued expense, and before adjustment expenses are understated and liabilities are also understated. We move on to number D. Service revenue of 490 collected in advance has been earned. So this is unearned revenue, and the liabilities are overstated and revenue is understated. Number E, salaries of 620 are unpaid. This is an adjustment for accrued expense, and before adjustment expenses are understated and liabilities are also understated. Then the last one, prepaid insurance, and when it is prepaid insurance, this is adjustment for prepaid expense. Assets are overstated and expenses are understated. Let's move on to the next exercise. The ledger of Sajovic Rental Agency on March 31 of the current year includes the following selected accounts. We have these accounts over here, and we have to make uh, we have um, we have to analyze these as well, and we have to prepare the adjusting entries at March 31, assuming that they are made quarterly. Quarterly means for a period of 3 months. So equipment depreciate at the rate of 280, and because it is quarter, so 280 times 3. So depreciation expense is debit and accumulated depreciation equipment is credit by 840. Then half of the unearned rent revenue was earned during the, so unearned revenue is 12,400, and half of this amount will be 6,200. So unearned revenue is debit and rent revenue is credit by 6,200. Number 3, interest of 400 is accrued on the notes payable. So we have interest expense of 400 and it is accrued, we have not paid, so interest payable is credit. Supplies on hand is 850. Now you can see that supplies are 3000 and on hand is 850. That means 2150 has been consumed. Then finally, insurance expire at the rate of 400. Because we are preparing on a quarterly basis, we simply multiply by 3. So insurance expense is debit by 1200 and prepaid insurance is credit by 1200. We move on to the next exercise. Adam Singh DDS opened an incorporated dental practice on January 1, and these are the set of accounts. We have to prepare the adjusting entries and we have to use these set of accounts as well. So number 1, performed services for patient who had dental plan insurance. At January 31st, 760 of such services were earned but not yet billed. So account receivable is debit by 760 and service revenue is credit by 760. Then utilities expense incurred but not paid prior to January 31, total 450. So this is utilities expense for 450 and accounts payable is credit by 450. Then purchased dental equipment on January, paying this amount and 3 years note payable. The equipment depreciate at the rate of 400 per month. We are preparing this on a monthly basis. So depreciation is debit by 400 and accumulated depreciation is credit by 400. Then interest is 500 per month. Where again this is accrued. So interest expense is debit by 500 and interest payable is credit by 500. Then purchase a 1 year malpractice insurance policy for 24,000. So this is for 1 year. So 24,000 divided by 12 will give us 2,000. 24,000 divided by 12, that is 2,000. So insurance expense is debit by 2,000 and prepaid insurance is credit by 2,000. Then purchased 1750 of dental supplies on January, that 50 of them were on hand. So 750, 1750 minus 550, that makes 1200. So supplies expense is debit by 1200 and supplies is credit by 1200. Let us move on to the next exercise. The unadjusted trial balance for Sarah is given below. We have a set of accounts over here, and we have to prepare the adjusting entries for the above items. So first of all, supplies on hand is 500. Now supplies, you can see, is 2500. 2500 minus 500, it means equal to 2000. So supplies expense is debit by 2000 and supplies is credit by 2000. Then insurance expires at the rate of 100 per month. So insurance expense is debit and prepaid insurance is credit. Then depreciation for the month is 75. So depreciation expense is debit by 75 and accumulated depreciation is credit by 75. Then number 4, as of October 31, 800 of the previously recorded unearned revenue has been earned. So unearned service revenue is debit and service revenue is credit. Then services provided but unbilled and no receivable has been recorded are 280. So accounts receivable is debit by 280 and service revenue is credited by 280. Then we have interest expense of 70, so accrued. It is accrued. So interest expense is debit by 70 and interest payable is credited by 70. Then accrued salaries at October 31st are 1400. So this is accrued again. We have not paid. Salaries and wages expense is debit by 1400 and salaries and wages payable is credit by 1400 as well. Let us move on to the next exercise. The income statement of Kaleta company for the month is as follows. We have service revenue and we have to prepare the income statement. So we have the service revenue and you can see that there are two service revenues. Service revenue number 1, 5500, and there is another service revenue. You can see revenue earned but unrecorded is 700. So 5500 plus 700, that makes 6200. Then we have salaries and wages expense of 2100. We have supplies expense of 900. And let me see if anything else. Supplies expense includes 200 of supplies that are still on hand. So supplies expense will be 900 minus 200. That makes, so salaries and wages are how much? Oh, I have to check with the salaries and wages also. 1 minute. So salaries and wages expense will be 2100, and then we can also see that unpaid wages are 360. So this will be added as well. So this will be equal to 2460. For supplies expense, you can see we have 900 and supplies on expense include 200 of supplies that are still on hand. So 900 minus 200, that will make 700. Then we have utilities expense of 500, no adjustment for that. Insurance expense, uh, what else? We have insurance that expired during July of 350 was omitted. So we have to add this expense of 350. And finally, we have the depreciation on equipment of 150. So this makes a total of 4,160, and the net income will be 2,040. Okay, let us move on to the next exercise. And this is interesting. Selected accounts of Sandit company are given to us. We have to analyze the transactions and journalize the July transactions. So you know that when we record the transactions, we record them in a chronological order, that is according to the dates. So the first general entry that you can see over here will be for July 10, and for July 10 supplies is going to be debit by 200, and obviously we are purchasing supplies, so supplies is credit by 200. After 10th July, the next date that you can see over here to be caught is July 14. And on July 14, we have the service revenue of 3,800 credit. You can see 3,800 credit, and this will be cash 3,800. Then after 14, you can see the next is July 15. So salaries and wages expense is debit by 1,000, and cash is credit by 1,000. After 15th of July, the next date in a chronological order is going to be July 20, and cash is debit by 600, and unearned service revenue is credited by 600. Okay. Next is going to be the so these are the July transaction that we have recorded, and then we go for the adjusting entries that were made on July 31st. Okay, on July 31st, we will look into the different transactions, and the first one that you can see is supplies. Now you can see that supplies is going to be how much supplies is credit on by 750. So if it is a credit for supplies, definitely there must be supplies expense, and supplies expense is 750. So supplies expense is debit by 750, and supplies is credit by 750. Next we have, you can see we have the accounts receivable, and that is for 500, and that makes lot of sense because we have July 31st service revenue of 500 as well. Next we have the salaries and wages expense. You can see that that is for 1,000. So salaries and wages are going to be debit by 1,000, and it is because this is adjustment, it means it is at the end of the period. So salaries and wages payable is credited by 1,000. Then we have unearned service revenue, and unearned service revenue is debit by 900. That means we have earned a service revenue of 900. So this completes this exercise, and we move on to the next exercise, and that is another interesting exercise over here. We have the trial balance, and we have this information before the adjustment and after the adjustment. So we are going to go one by one, and let us see the first one. Now you can see the accounts receivable has increased by 9,400. So if it is increasing by 9,400 after the adjustment, that means the service revenue should also increase by the same amount. And you can see that the service revenue has increased. This is how much? And this will be an increase of 600 over here, accounts receivable. And for service revenue, you can see again there is an increase of 600. So accounts receivable is debit by 600 and service revenue is credit by 600. We move on to the next exercise, next one, and that is for supplies. You can see supplies has decreased by 2000, and that means there should be an increase in supplies expense, and you can see this has increased by 2000. So supplies expense is debit by 2000 and supplies is credit by 2000. Then you can see that the prepaid insurance has decreased by 1500, and there is a decrease by 1500. That means insurance expense must increase by 1500. So insurance expense is debit by 1500 and prepaid insurance is credit by 1500. Depreciation is interesting. You can see that we have accumulated depreciation, and this has increased by how much? By 1200. This has increased by 1200. That means depreciation expense should have increased by the same expense, and you can see this has increased by the same amount. So depreciation expense is debit by 1200 and accumulated depreciation is credited by 1200. Next we have the salaries and wages payable, that you can see they have increased by 1100. And if they have increased, that means salaries and wages expense must increase by the same amount, that is 1100. So salaries and wages payable is credit because liability is increasing by 1100 and salaries and wages expense debit by 1100. Finally, you can see that the unearned revenue has decreased by 1000. It has decreased, and if unearned revenue has decreased, it means that the revenue has increased by the same amount, and you can see that revenue has increased by 1000. So unearned revenue is debit by 1000 and rent revenue is credit by 1000. Okay, let us go to the next exercise. The trial balance of Sahara Corporation is given over here, and we have the set of adjustments that are required, and we have to record the adjusting entries. So we are going to make these adjusting entries on the next page, and but before that, let us look into the type of adjustments required. Now, an inventory count at the close of the business on October 31 reveals reveals that 1000 of supplies are still on hand. That means this is a adjustment for prepaid expense. Insurance expires at the rate of 50. Again, this is example of prepaid expense adjustment. Then number C, depreciation on equipment is 480, and if it is depreciation, this is also a example of prepaid expense adjustments. Then the company evaluate that it has earned 400 from the unearned revenue. Again, you can see it is an example of unearned revenue. Then in October, they have earned 200 for the guided services. And if it is they have earned, that means this is a accrued revenue because they have earned. The notes payable require Sarah to pay interest on, and so this is they have not paid, but so this is a accrued expense. and they are not paying the salary here. That is also an example of accrued expense. Okay, let us see how we record the journal entries. An inventory count at the close of business on October 31st revealed that 1000 are still on hand. Now you can see we have supplies of 2500. So 2500 minus 1000, that means for supplies has been consumed for 1500. So supplies expense is debit by 1500 and supplies is credit by 1500. Insurance expire at the rate of 50, so insurance is going to be recorded as 50. Then the company evaluate depreciation on equipment is 480 each year. Now because it is 480 each year, so 480 divided by 12, the number of months, that makes 40. The company evaluate that it has earned 400. So if it has earned, so unearned service revenue is debit by 400 and service revenue is credit by 400. Next, on October 31st, they have earned 200 for guided services that were not billed to client. So accounts receivable is debit and service revenue is credit. The notes payable require Sarah to pay interest at an annual rate of 12%. Now you can see that the notes payable are 5000 and this is going to be at the rate of 12%. So 12% will be how much? 12 5 is 60. That will be equal to 600. Now this is for 1 year and we have to calculate for 1 month. So we divide by 5. So 12 by 12. So 12 5 is 60. That makes 50 as such. Number G, the Sarah paid salaries on October 26 for its employees. First 2 weeks at work. The next payment of salary will now occur on November 9. So if they are going to be we are making these transactions up to October 31, that means salaries has been accrued. We have not paid and that must be recorded. The employee receives salaries of 2000 for a 5-year day work week or 400. And now you can see that how many workers are there. Okay, 400 per day, and that is for 5 days. Okay, so I would like to explain this on the next slide, and you can see that they have made the payment on October 26. That was the payday, and the next day is going to be 9th of November. Now these workers have worked for these 3 days, and when they are working for 3 days, so they have to be in this salary expense has accrued. So and the rate was 400 per day. So 400 times 3. So not interest expense but salaries expense is debit by 1200 and this will be salaries payable and this will be credit by 1200. So salaries expense is debit by 1200 and salaries payable is credit by 1200. So we have done the first part. We have recorded the adjusting entries as it was required and we have to post them into the ledger. So let us see how we do that. Now we have already made the journal entries and the journal entries are there. And first of all, we will post all the balances from the trial balance and let us see how we do that. Now cash 15,200. Supplies 2,500, a prepaid expense 600, equipment is 5,000, notes payable is 5,000, Accounts payable is 2,500. Unearned service revenue is 1,200. Common stock is 10,000. Dividend is 500. Service revenue is 10,000. Salaries expense is 4,000. Rent expense is 900. So we have simply put the debit amount in the debit column and credit amount in the credit column. And now we are going to record the adjustments that we have made. So we have supplies expense 1,500. Supplies is credit by 1,500. Insurance expense is 50 and prepaid insurance is credit by 50. Depreciation is 40. Accumulated depreciation is 40 again. Then unearned service revenue is debit by 40. And then service revenue is debit by 4, is credit by 400. Accounts receivable is debit by 200. Service revenue is debit by 200. And then interest expense is 50. Interest payable is credit by 50. Then we have salaries expense, and salaries expense is where is salaries expense is 1,200 and salaries payable is 1,200. So the balance for cash will be 15,200. For supplies, the balance will be 1,000. 2,500 minus 1,500. Prepaid will be 550. 600 minus 50. Equipment will be 5,000. Notes payable 5,000. Accounts payable 2,500. And unearned service revenue will be 1,160. Okay. Then we have the common stock, and this will be 1,000 only. Dividend will be 500. Service revenue, that we have a credit balance of 10,600. Then we have salaries expense 5,200. Rent expense is 900. Then we have supplies expense, insurance expense, depreciation, accumulated. So we have all the balances over here. And once we have made the ledger, what is next they are asking for? So we have posted them in the ledger, and we have to prepare the post adjusted trial balance. So these T accounts, I have already put them in a table. You can see on the left hand side all the T accounts that we have made here. These are simply presented over here, and we are going to make the adjusted or the post adjusted trial balance. Now when we prepare the post adjusted trial balance, we simply take the balances from the ledger. We have cash 15,200. We have supplies for 1,000. Prepaid insurance is is 550. Equipment is 5,000. Notes payable is 5,000. Accounts payable is 2,500. Unearned service revenue is 800. Then we have common stock 10,000. And then we have dividend of 500. Okay. Then we have service revenue for credit 10,600. Then we have salaries expense 5,200. Rent expense 900. Then we have supplies expense 1500. Then we have insurance expense 50. Depreciation is 40. Accumulated depreciation is 40. Credit accounts receivable debit. Interest expense 50. Interest payable is 50. And salaries payable is 1200. So once we make the total of this trial balance will be 30,190. 30,190. Remember that the debit and the credit balance of the trial balance must be equal. If they are not equal, then there is a mistake. Okay, what is next? So we have prepared the adjusting entries, we have prepared the ledger, we have prepared post adjusted trial balance, and now from this post adjusted trial balance we will prepare the income statement, retained earning statement, and the balance sheet. So let us see how we do that. So we have the trial balance, what we have already done here. This was the trial balance that we have prepared. So you can see that total is 30,190. We have the trial balance, and from this trial balance we are going to prepare the income statement, retained earning statement, and the balance sheet. We start for we can clip in the numbers. We have cash 15,200. Supplies is an asset 1000. Prepaid insurance is an asset 550. Equipment is 5000. Notes payable is 5000. Accounts payable is 2500. Unearned service revenue is a liability 800. Common stock is 10,000. Dividend is 500. This will be in the retained earning. And then we have service revenue 10,600. Then we have salaries expense 5,200. And then we have the rent expense of 900. Sorry. Salaries expense 5,200. Rent expense is 900. Supplies expense is 1,500. Insurance is 50. Depreciation is 40. Interest expense is 50. So the total expenses are how much? The total expenses will be 7,740. So total revenue minus total expense will give you the net income of 2,860. Now beginning retained earned, so that is the net income. Now beginning retained earning is 0. Net income is what we have from the income statement 2860. So the total will be 2860, and from this we will subtract the dividend, and that will give us 2360. I would like to put this in the last column. 1,500, 1,550, and I will erase these numbers. Okay. And then we have the accumulated depreciation, and accumulated depreciation was 40. So the total will be 4,960, the book value of the equipment, and the total assets will be 21,910. Then we have interest payable, and interest payable is 50. We have salaries payable, that is 1200. So the total for the liabilities is 9550. we have the common stock of 10,000 and the ending retained earning of 2360, that makes 12,360. And if we make the total, again it is equal to 21,910, and you can see that the total of assets is equal to the total of liabilities and stockholder equity. Let us go to the last exercise of this video. We have Jill Vogel started his own consulting firm, and we have the trial balance, and these are the adjustments to be made, and we have to prepare adjusting entries for the month of June. So let us see over here. You can see the first one is supplies on hand, total 720. Now when supplies on hand are 720 and supplies is 2000, so 2000 minus 720, that is 1280, that is the supplies expense, and supplies will be credited by the same amount. Then utility bill of 180 has not been recorded, and if it is not recorded, this is a utility expense. We have not paid, so that's why accounts payable. Insurance policy is for a year and the insurance is 2880. We are doing it for 1 month, so we have to divide this by 12, and that will be equal to 240. Insurance expense debit and prepaid insurance credit. Then we have unearned service, number 4, 4,100 of unearned service revenue has been earned, and if it is earned, so unearned service revenue is debit and service revenue is credit by 4,100. Then we have salaries of 1250. So salaries of and wages expense is debit by 1250. We have not paid. This is accrued. So salaries and wages payable is credit by 1250. Next we have the depreciation of 250 per month. So depreciation expense is debit and accumulated depreciation is credit. Then invoice representing 3,900 have not been recorded, so it must be recorded. We have not received, so accounts receivable is debit and service revenue is credit. So that's how we record these adjusting entries. So we have to prepare the adjusting entries for the month of June, and then we have to post them to the ledger account. So let us go to the next page, and we are going to post them to the ledger account. And first of all, we will record all the balances from the trial balance, debit amount on the debit side, credit amount on the credit side. We have cash 6850 debit, accounts receivable 7,000 debit, prepaid insurance 2880, supplies is 2000 debit, equipment is 15,000 debit, accounts payable is 4230. Then unearned service revenue is 5,200. Then common stock is 22,000. Then service revenue is 8,300. Service revenue is 8,300. Salaries and wages expense is 4,000, and rent expense is 2,000. Next, we are going to record all the adjustment that we have done, and you can see over here supplies expense 1280. Supplies expense is 1280. Then supplies is credit by 1280. Utilities expense is 180 debit, and whereas utilities expense is debit by 180. Accounts payable is credit by 180, and accounts payable is credit by 180. Insurance expense is 240 debit. Prepaid insurance 240 credit. Unearned service revenue 4100 credit. Sorry, uh, 4100 debit. And then we have service revenue 4100 credit. Then we have salaries and wages expense, that is 1250. Then we have salaries and wages payable 1250. 1250. Then depreciation expense is 250. Accumulated depreciation is credit by 250. Accounts receivable 3900. Accounts receivable is debit by 3900. And finally service revenue is credit by 3900. So once we have done this, we are going to take the balances, and for cash it will be 6850. For supplies 2000 minus 1280 is 720. For accounts receivable, this will be 10,900. Prepaid insurance 2880 minus 240, this will be 2640. Equipment will be the same. Salaries and wages will be 5250. Accumulated depreciation, rent, accounts payable will be 4410. Depreciation will be 250. Wages and salaries 1250. Insurance 240. Unearned service revenue will be how much? 5200 minus 4000, that is 1100. Utilities will be 180. Common stock is correct. Supplies 1280, and service revenue will be 16300. So we have posted the adjusting entries to the ledger, and now we have to prepare the adjusted trial balance. And when we prepare the adjusted trial balance, let us see what we do. We once again we are going to have all the T accounts that we have made just now. I have simply put, you can see on the left hand side, and we will simply transfer these numbers. Cash is 6850. Accounts receivable is 10,900. Supplies is 720. Prepaid is 2640. Equipment is how much? 15,000. Then we have salaries and wages. Accumulated depreciation is 250. Accounts payable is 4410 in the credit. Accumulated depreciation will be in the 250. Then salaries and wages payable 44. Accounts payable is 44. Salaries and wages payable is 1250. Unearned service revenue is 1100. Common stock is 22,000. Then we have service revenue 16,300 credit. Salaries and wages expense. So salaries and wages expense is 5250. Rent expense. Where is rent expense? Is 2000. Depreciation expense is 250. Insurance expense is 240. Utilities expense is 180 and supplies expense is 1280. So we are going to make a total for this, and let us see how much is the total for the debit and the credit. So the total will be 45,310. 45,310. Okay. So this completes the third video on accrual accounting. I hope you have enjoyed the presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.